Welcome to Market Domination. I'm Brooke DiPalma in for Josh Lipton, live from our New York headquarters. There's about 30 minutes to the closing bell. Let's take a quick look at how stocks are moving. We're trying to maintain some momentum within this market as we make our way towards the close. The Dow, the Nasdaq, and the S&P 500 trying to hold on to modest gains here. The Dow up about 0.06%. The Nasdaq leading the way here, up about 0.4%, and the S&P 500 trying to maintain the momentum as well, up about 0.2%. But we did open in the green this morning after that federal investigation was launched into the Federal Reserve. We'll have much more on that in just a bit, but I do want to take a look at Treasury and how exactly they're reacting to these moves this morning. We do have the 10-year T-note moving higher, up about 2 basis points. 30-year T-bond yield also moving higher, up about 2 basis points as well. And if we take a look at the U.S. dollar, we're seeing some of the lowest levels that we've seen over the past few weeks. Taking a look at the 10-day, up about 0.6%, but just today down nearly 0.3% as investors try to digest this latest move by the administration. If you also take a look at some commodities, the way that they're trading, you're seeing gold moving higher as investors perhaps seek out safe havens within this market. Gold futures up 2.5% today. Also seeing momentum within silver, up more than 7.4%, up nearly 7.5%. Also want to take a look at the Nasdaq as well and what we're seeing there, because Walmart announced today that it will be joining the Nasdaq 100 on January 20th, but a bit of a mixed picture here as investors try to assess these latest geopolitical and also concerns here in the U.S. between the relationship between the Federal Reserve as well as the Trump administration. Let's hear more about that, because the relationship between the Fed and the Trump administration has quickly deteriorated as the Department of Justice opens a criminal investigation into the Federal Reserve and its chairman, Jerome Powell. Here with the latest is Yahoo Finance's Jennifer Schonberger.
Good afternoon, Brooke. White House Press Secretary Caroline Leavitt said earlier today that President Trump did not direct the Justice Department to investigate Fed Chair Jay Powell. Speaking with reporters earlier at the White House this afternoon about whether she could provide assurances that Trump's criticisms had nothing to do with the investigation, Leavitt told reporters, quote, "The president has every right to criticize the Fed chair. He has a First Amendment right, just like all of you do. And one thing is for sure, the president has made quite clear Jerome Powell is bad at his job. As for whether or not Jerome Powell is a criminal, that's an answer for the Department of Justice." Now, as you know, tensions between Powell and Trump have been bubbling since the first day that Trump took office for his second term. Unhappy with how high rates were, Trump threatened to fire Powell, touching off a major sell-off in markets that ultimately caused the president to back off of that threat. However, tensions started to bubble up again over the summer months when the administration and Republicans seized on Chair Powell's testimony before the Senate Banking Committee this past June on comments made on renovations of the Fed's headquarters here in Washington, suggesting that perhaps Powell had mischaracterized the nature and costs of the renovations to lawmakers. Then, in a rare visit to the Fed's headquarters in July, Trump donned a hard hat and toured the construction site with Powell as the two disagreed publicly about the cost overruns. Trump famously at the time saying that the Fed was over budget, running at $3.1 billion, something that Powell disputed right there on the spot. Now, things seemed to cool a bit over the fall as the Fed embarked on 3 consecutive policy meetings of rate cuts as there were concerns about the nature of the labor market and as the impact of tariffs on inflation were better than feared. However, once December 30th rolled around, it seemed clear that the president was still unhappy with Chair Powell and the Fed, threatening to sue Powell. Fast forward to Sunday night when Chair Powell revealed that indeed a grand jury was opening a subpoena and an indictment, a criminal indictment, into Chair Powell as of January 9th. Brooke?
Jen, only 12 days into the new year and lots has happened. Jennifer Schonberger, thank you so much.
Thanks.
Federal Reserve Chair Jerome Powell revealed on Sunday that the Justice Department served the central bank with grand jury subpoenas and threatens a criminal indictment related to Powell's testimony before the U.S. Senate.
I have deep respect for the rule of law and for accountability in our democracy. No one, certainly not the chair of the Federal Reserve, is above the law. But this unprecedented action should be seen in the broader context of the administration's threats and ongoing pressure. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president.
Joining me now on the potential fallout from this move is Alan Blinder, Princeton University professor of economics and public affairs and former Federal Reserve Vice Chair. Alan, unprecedented seems to be the word that everyone is using, especially that video alone being unprecedented in itself. What sort of risk is this to the Federal Reserve's independence?
Well, it's a real risk. I mean, who knows how far this will go in the judicial system. It would be nice to see it disappear very quickly, as some of the Trump administration's other forays have, but there's certainly no guarantee of that. And this really raises the war between the Trump administration and the Federal Reserve to an entirely new level. Criminal. Think about that word, criminal. What in the world could he actually mean? Cost overruns? That's criminal? I wonder how many builders have had cost overruns. So, given the background which you showed in that clip of Jay Powell, there's every reason for the Federal Reserve to be very wary of this and take it seriously and, to your point, respond.
Yeah, and a group of former Fed officials, including Janet Yellen, Ben Bernanke, called this unprecedented. But they also went on to say that this is how monetary policy is made in emerging markets with weak institutions, with highly negative consequences for inflation and the functioning of their economies more broadly. What do you make of that statement? And also, it's worth pointing out that they posted that statement on a Substack.
Well, I don't know about the latter, but the statement itself is indicative of the fact that in many less developed countries, not all for sure, but in many, but not in developed countries, at least in recent history, monetary policy is made by politicians, not the kind of technocrats that run the Federal Reserve, including, of course, Jay Powell, but also including everybody else on the Federal Open Market Committee. And the evidence shows that when you leave monetary policy to technocrats who are not trying to push the program of one political party over the other, it's not their job. They know it's not their job. You get better economic policy than you do if you leave it to politicians. There are some very recent examples of both, like Turkey. I mean, Turkey politicized its monetary policy, got huge inflation, and then Mr. Erdogan decided that was a bad idea and we better put in somebody else. So that's the same country going both ways.
Alan, we are expected to get a new Fed chair pick. Reportedly, President Trump having conversations with BlackRock's Rick Rieder this week. We also have Kevin Warsh, Kevin Hassett as potential Fed picks. Moving forward, how are you viewing these potential candidates for the Fed? And if there's a more dovish pick, what does that mean moving forward?
Well, unfortunately, for answering your question, I don't know Mr. Rieder at all, and I don't know his views on monetary policy. I do know President Trump's views on monetary policy, and he wants much, much lower interest rates, recklessly lower. Look, you could have an argument right now and be a legitimate argument that say interest rates ought to be 50 basis points lower than they are. I don't happen to believe that, but it's not a crazy view, and a sensible person could believe it. But 1% interest rate? That is a recipe to raise inflationary expectations and, ironically, therefore raise long-term interest rates, not lower them, which is what the president seems to think.
I do quickly want to get your take on this, because we are seeing Senator Tillis, he's a Republican from North Carolina. They're going to be leaving office, but they said that they plan to block President Trump's picks until this investigation is sort of put behind them. We also heard from Senator Lisa Murkowski saying that Senator Tillis is right for making that move, for blocking potential candidates. What could this mean as we try to name the next Fed chair?
Well, it could mean a delay. It could mean a long delay. There's no predicting that. And by the way, unless I'm missing the law, if there's a delay, Jay Powell can stay in his position. That's come up before, not for chairs, but for members of the board, that the Senate has not confirmed the replacement, and that person, this has happened several times in history, stays in place until replaced.
I mean,
ironically, that could leave Jay Powell in the chairmanship longer.
Alan, what's interesting here, too, is that Fed chair's his term ends as chair in May, but he'll stay on as a governor, from what I understand, through January of 2028.
He could.
So what sort of implications does that have? Is Fed Chair Powell just going to stay in this position and perhaps propose opposition within that seat?
Well, he hasn't said anything about staying on. There's been speculation about him staying on. Previous chairs, when their term ends, have not stayed on. Well, it happened once, excuse me, in the early days of the Fed, but I think only once. As in any organization, when the number one's term ends, he or she usually leaves rather than hang around as number 2, 3, or 4. If Powell decides to stay, the reason, of course, would be to deprive the president of the ability to replace yet another member of the Board of Governors. As you pointed out, he's a member of the Board of Governors in addition to being his chair. And that term as a member of the Board of Governors lasts several more years.
Alan Blinder, lots to watch within this story. Thank you so much for helping us break it down.
You're very welcome.
Coming up, we take a look at the regulatory outlook for tech next on Market Domination Overtime. The support needed for the AI boom in cloud computing is coming with a hefty price tag. At least $3 trillion is set to flow into data center related investments over the next 5 years alone. That's according to Moody's ratings. But with big bets in tech also comes regulation, other political risks as well. And here with a closer look at what to expect this year, we welcome in Tusk Ventures founder and CEO Bradley Tusk. Bradley, thank you for being with us. I want to get into this regulatory environment where we seem to have this debate between the states and the federal government. We have Florida Governor Ron DeSantis coming out with a framework. Then we have this national policy framework. Then Governor DeSantis sort of flowing back. What do you make of this debate on AI regulation moving forward?
Yeah, I mean, there's a variety of different jurisdictions that have regulation in different ways. So, for example, if we're talking about national security, that's clearly the federal government. If we're talking about how an AI application impacts individual residents, consumers, like say mental health chatbots, that's state. If we're talking about zoning and permitting for data centers, that's municipal. So depending on what the issue is, it happens at all different levels. But I think, as you know, President Trump issued an executive order a couple of weeks ago that said, no, states can't do anything, mine, all mine, which is pretty typical for the president. And so, various battles will ensue.
Bradley, when do we expect some sort of conclusion here?
Well, never, because AI is always going to keep evolving and keep being regulated in different ways, and you're going to have different parties winning control in different cities, states, federal, and they're going to have different views on how to regulate things. But, the other way to look at your question is, will the U.S. government, especially on the federal level, actually regulate AI in a thoughtful way? Keep in mind, Internet 2.0, so social media, has still not been regulated. That's been around now for close to 20 years. And I don't know how many more teenagers have to commit suicide or have eating disorders or cutting problems or how many other disasters have to ensue on platforms like Instagram or Snap for Congress to finally do something about it. So while it would be great if Congress actually did their job and enacted thoughtful regulations, we haven't seen them do that yet.
So do you think that these specific areas, zoning, as well as mental health, as well as other key initiatives should be where right now regulators should be focused on? Where are the key areas that really need to make way?
Yeah, a few things. So on the zoning and permitting, what's really important here is it's not a question of like, should the data center go on this street or that street? It's that energy consumption by data centers is tremendous. So experts would say that if every data center currently planned all came online, total energy consumption in the United States would double. And as everyone watching this show knows, when demand goes way up and supply stays flat, prices go way up too. And the reason why I think permitting and zoning will become a really hot issue is if your electricity bills, if my electricity bills, if I've been watching this, electricity bills all go up 40% to subsidize Jensen Huang or Sam Altman or someone like that, there's going to be a massive political revolt. People are going to start throwing out their elected officials, one after the next, regardless of party. And politicians are smart, and more than anything else, they value the next election of self-preservation. And so I think you're going to start to see permanent battles at the local level and even maybe somewhat at the state level, specifically around that. And then when you get to things like, say, mental health chatbots, Illinois and Nevada both banned mental health chatbots last year. A bunch of states like Pennsylvania are looking at that same issue right now. And that is very much within the kind of jurisdiction of states. And then you get to a question where states like New York and California and Colorado have passed broader regulatory frameworks on issues around generative AI and harm prevention. And in reality, that would be much better done at the federal level, where companies would be dealing with the same regulatory framework across the country instead of 50 different ones. But I don't blame the legislators in those states for acting on it, because why would anyone have confidence that the United States Congress could ever accomplish anything?
Bradley, another area that you think will see regulatory or regulations this year is prediction markets. What do you think of that $400,000 bet on Maduro's fallout? Is that sort of a catalyst to get that regulation in place?
A little bit. Look, it's fascinating, right? Just in and of itself, intellectually. So, you're going to see, I think, two things. There are going to be states that are going to this cycle try to pass various restrictions on prediction markets, the types of bets you can make around elections or political actions or things like that. But the broader question actually isn't really about that. It's about who has jurisdiction over prediction markets in the first place. So when the Congress banned sports betting in 2018, the Supreme Court said that law was unconstitutional and that it took away powers that were states' rights, and it gave states the ability to control sports betting, and dozens of states since have enacted sports betting regulations and systems. Prediction markets are governed federally by the CFTC. They're seen as contracts and commodities, not as bets. And states are saying, hey, that's our money. That's our right to regulate those types of companies. We should be getting the tax revenue. We should be issuing the licenses, not the federal government. And so they've been suing each other. And in some jurisdictions, the CFTC has won. In other jurisdictions, the states have won. So this is going to end up at the Supreme Court sooner or later. And then what the court decides on this will determine ultimately who controls it. And one final step, which is if you're thinking about, your investments in gaming sector and different companies, should regulation remain for prediction markets at the federal level, it doesn't really make sense for any sports betting company to remain a sports betting company, because you could be a prediction market company instead, do the same kinds of activities, and pay a far lower tax rate. That's going to take away a lot of existing state revenue, which means states are going to have to make up the difference. And I think that's where you'll start to see iGaming, because that's all forms of digital casino gaming, then start to get approved.
Certainly a shift in this moment. Another area that you think could be seeing sort of a catalyst, a tipping point, is within nuclear energy. We're hearing lots of headlines around that too. Meta recently signing a nuclear energy deal. And on top of that, they named a former Trump advisor this morning as president. What do you make of that? And is this sort of a tipping point where nuclear energy, AI, and politics all seem to come together? It
might, and also a place where the left and the right might come together, right? So the left likes all forms of clean energy. Trump sees clean energy usually as an ideological issue, so he hates wind and he hates solar simply because he thinks progressives like it. But the Trump administration has been really friendly to nuclear. People on the left are also friendly to it. The power needs of the data centers are going to require some sort of change. And that could be alternate forms of compute that aren't necessarily the Blackwell chips from NVIDIA that just need a lot less energy. It could be using an inference model, but it could also be finding ways to power data centers specifically through microgrid nuclear. We know it exists. We know it works. The U.S. Navy uses it on their different ships. So the question is, can they be brought online quickly to power data centers? And then you get back into permitting and zoning, simply because nuclear tends to freak some people out. And to me, one of the big questions here isn't really about economics or regulation. It's about social norms. So 3 Mile Island happened in March of 1979. And I have a thesis that if you were more than 10 years old when that happened, you probably have a fear of nuclear energy because it was this formative experience and event that happened in American history while you were paying attention. But if you were born after, let's say you were 10 years old when that happened, so subtract a decade, if you were born, say, after March of 1969, and that's 78% of the U.S. population, you don't remember 3 Mile Island, right? I was born in 1973. I was 6. I don't remember it. So I'm not particularly afraid of nuclear. And so one interesting question will be that 22%, obviously a lot less than 78, but probably also a lot more in power generally. How much can the norms change so that things like permitting and zoning won't be a massive problem?
Bradley, I want to get your take on one more thing. We're seeing billionaires like Peter Thiel, as well as Larry Page, David Sachs, leave California because of this proposed wealth tax there. It would impose a one-time tax of 5% on California residents who have more than $1 billion at play here. And what's your take on them leaving? Is this part of a bigger risk or a bigger trend that you're watching?
Yes. I agree with their right and choice to do so. Perhaps some billionaires in California are so patriotic to their state that they'll stay no matter what. But look, I mean, this is always the challenge of raising taxes at a state or local level instead of a federal level. If the U.S. government raises taxes, most people don't leave the country and become citizens of another country. But if you raise taxes at the state level, people are mobile. In fact, the people who you were trying to tax the most are the ones who have the most money. It's easiest for them to pick up and leave, especially now in an era of remote work. And so it's oftentimes robbing Peter to pay Paul, where you see progressive states say, we demand justice, and social justice means making billionaires or millionaires pay more money. And yes, that might make people who are not millionaires and billionaires sort of feel better. But typically speaking, the people pushing these types of initiatives, they're not the poorest people. It's the people who are most jealous of the 1% are people in the 8%, the 12%, the 18%, and they're angry that they're not in the 1%. And they've concluded the fact that the reason they're not in the 1% is because of corruption and somehow they're getting screwed, and not that they weren't good enough to actually get there. And so for them to feel better about themselves, they want to tax others. But the problem is the people, say, in the 80th percent, who are not thinking about the 1%, they're thinking about putting food on the table. They're thinking about paying the rent or the electricity bill. They just want as much total government money as possible for programs they rely upon, like Medicaid or SNAP or housing or whatever else. And a lot of these taxes, in the short term might generate a one-time bump in revenue, but then when you lose a lot of residents who are high earners that pay a lot of taxes every year, you end up with less money. So for example, I live in New York City. In 2012, New York City had 12.7% of America's millionaires. By 2022, that fell to 8.7%. The difference in city and state budgets and tax revenue they would have had if they just kept pace, $13 billion. So if you're Mondani, that's your child care plan, your bus plan, everything else. And so ultimately, I think a lot of these wealth taxes are very foolish.
Bradley, Tusk, thank you so much. We'll be right back.
Yeah, thanks for having me.